So what are the key factors that you should look at before investing in a bond? There are 5 key factors. Number 1 is the credit rating. Think of the credit rating like the reliability of a restaurant that you're looking at before you want to go into the restaurant, which could be the Zomato, Google reviews, or however you decide. There are credit rating agencies that give a particular rating to every bond that determines the risk the bond has. The lower the rating, the higher the risk, and the higher the rating, the lower the risk. Ratings can range from sovereign, which are usually to government-backed bonds, to AAAs, A's, AA's, BBB's, and so many more for the corporate bond. The second factor is interest rate. Interest or coupon, as we usually call it in the bond market, is the fixed amount that you will get on an annual or a semi-annual or a quarterly basis for your investment. If the interest rate is usually higher, the bond may be riskier. But if the interest rate is lower, it's definitely a risk neutral or a less riskier bond that you're investing in. The third factor is duration. Bonds can be short-term or long-term. If you park your money in a long-term bond, you may get slightly lower returns and your money will be in a safety net for a longer period of time. Where a short-term bond may be more riskier and hence the risk would give you higher returns. The fourth factor is inflation. Inflation affects everything around us, and so does it in the bond market. If inflation is high over time, the value of amount that you receive from your bond investments, that will reduce. The essence of the value will basically reduce. And that's why inflation plays a very important factor to decide whether you should invest in a short-term or a long-term bond in sync with our third factor. And the fifth and the most important factor is the tax considerations. You might want to invest in a tax-free bond to benefit from the tax that you need to pay, or you may want to invest in a taxable bond depending on the kind of investment that you need to do. Weighing these 5 factors is crucial as you start your investment journey because they will help you decide the right type of bond that you need to invest in and to grow your investment portfolio.